Hello everyone and welcome back to Sudden Wealth. I hope you guys are having a good start of the week, I would say. If you do enjoy the content, please consider dropping that like and subscribe. You know that it greatly helps the channel. So thank you very much for your support. So what we have today is basically all markets in the red. Once again, the bond market close to 1% down, which means it triggers all sorts of sell-offs across all the asset classes, stocks, commodities. Even gold is down almost 2%, and then crypto gets it's one of the hardest hits. This is stemming from higher inflation data and expectation that inflation will remain higher. This is the funny part that I've said, which is when the Fed actually cut rates, that will have a deflationary or disinflationary impact rather than inflationary impact. And people always get this confused. They say, well, how can you say that? I mean, if they're gonna, lower interest rates, more credit, more spending, more inflation. I said, no, interest rates are the cost of money. This is a cost that everyone in an economy bears, including the companies. So when the interest rate or the cost of money went up to 5.5% plus whatever margin the banks charge, what do you think they do with that cost? They pass it to you and to me, the consumers. So we see that cost happening. If you actually reduce that cost, then you don't need for companies to pass it on to ourselves. But then you say something like this, yeah, but if everyone has access to credit, more spending, more demand, prices go up. Wrong. That only happens if the Fed prints and gives the money directly to people. The Fed's balance sheet went from 800 billion to 4.5 trillion with 1.6% average inflation per year. Japan has been printing money non-stop for 30 years. They've had an average of 0% inflation, and even now they have an inflation of 2.7% or something. China has been printing money since 2023, since around the summer. They are facing and fighting. They are facing and fighting deflation. We've done this for 15 years in the US and Europe, and we had average inflations of, as I just said, 1.6% in the US and 1.1% in Europe. Just the money printing does not, and the lowering of interest rate does not cause inflation. Why not? If you think about your closest friends or your closest family or whatever, probably they have car loans, student loans, credit card debt, mortgage, etc. If they go to a bank and they say, hey, give me 100,000 because interest rates are 1%, the bank says, no, you have too much debt, forget. But then if a guy with a very good job, low leverage versus his income or her income, they go there and say, can you give me a loan? Sure. Okay, I have a loan. What I'm going to do with this now, I'm going to buy some assets because I cannot, I'm not going to eat 5 dinners and 3 lunches per day. I'm not going to drive 7 cars per day. So it will just go into the asset classes. Now, this is the part that they're missing it. The funny part will be when they actually start cutting rates, everyone will expect inflation to explode, just like they've done in 2008. It seems like they forgot. And then when the inflation readings will start coming lower and lower and lower, people will, I hope, for the time being, understand the difference. Now, I want to say this. If the Fed does print money and it goes straight as stimulus checks to people, yes, then you're going to have inflation. There's no doubt about it. Okay, so let's not confuse things. Depends on the way you print the money. Now, I wanted to take this opportunity to address 3 topics which were raised in the comment section, and there were questions. So the first one was if I had a price prediction for PulseX. So in case you guys don't know, PulseX is the main DEX, decentralized exchange, on the PulseChain ecosystem. It has a mechanism which is a buy and burn, meaning every transaction that occurs in the platform, it does not have to include PulseX, can be any other tokens. A little fee goes into the market, automated, buys PLSX, the token, and burns it. So far, about 4% of the supply has been bought and burned forever. I think, and I mean, this is as valuable as anything, I think PulseX should do, at least in my view, a 50x from here. minimum. Now, what I've done is I've positioned myself in a way that if it does a 50x, I'm already very wealthy. So I don't need a 5,000x, a 50,000x, a 500. No, if it does a 50x, I will do very well. I do think it has the potential to do it. Does it mean that I'm trying to tell it to go and buy it? No. What if it just goes to zero? Furthermore, I'm not here to advise you of anything. The only thing I've been doing is being transparent to you and disclosing my positions before any kind of pumps happen. Actually, I've disclosed them. If you guys remember this, PulseChain and PLSX, I disclosed them after the SEC targeted Richard Hart. So the worst possible time, that's when I disclosed it, right? So nobody can accuse me of, I'm waiting for the pumps to then come here and shout it. But I do believe it's gonna do that. First of all, PulseChain is leverage on Ethereum. It's a great product. No VCs, no vesting periods, no inflation, no nothing. And also, the Sacrifice wallet has actually placed 170,000, has bought 170,000 Ethereum. So if Ethereum goes to, let's say, 12K, which I think is conservative, I think Ethereum can go to 29K. That would be my expectation. Then you're talking about billions and billions of dollars that can be used to buy PulseChain, PulseX, PulseChain, so PLS, PLSX, X, and the incentive token to the moon. But even on the organic side, if you want to call it, I do think PulseX will do at least a 50x before the end of the cycle. That's my expectation. If it does more, better. The more money I'm gonna make. If it does 1,000x, then you're gonna have a huge party here in the live stream, and probably I would even take off my mask just to have an idea. But if it does a 50x, I'm already very happy with it. So I hope that I've answered the question. Does that mean I'm advising you to buy it? No, this is what I believe in, my expectation. Can I be wrong? Sure, 100%. Now, second question was if I thought that the SEC would make Ethereum a security, and if the fact that Ethereum is proof of stake would increase the chances of it being considered a security versus if it were proof of work. So the difference between the Ethereum Classic, if you will, and Ethereum. Now, if the ETFs being submitted, would try to incorporate staked Ethereum in a way to kind of distribute dividends to the owners, I think maybe Gary Gensler could make a bit of a stronger case there. But look, the most security thing you have out there is XRP, and that's the one that they failed to classify as a security. In the case of Ethereum, we've had people already forgot about this, which is kind of funny. So what BlackRock did, because last time BlackRock was caught a bit off guard with Bitcoin, was to already launch some funds and then convert the funds into spot ETFs, because that seemed to be much faster for whoever had already Bitcoin fund, like a Grayscale Bitcoin Trust, for example. So BlackRock already filed for the Ethereum fund, and it will convert it into an ETF. And BlackRock even said that even if Ethereum was a security, they will still come up with an ETF. Now, the ETF, I think, is going to be approved, because BlackRock is involved, and they have basically a 99.5% approval rate. So I seriously doubt that that's not going to fly. Moreover, the commodity regulator already declared Ethereum not a security. So the CFTC, which basically is in competition with the SEC on how to, does this follow under the commodity? Does this follow under the security? So this is already being discussed, and the CFTC already declared it not to be a security. But more importantly, the proof of validation has nothing to do with being considered a security. I mean, I'm not a securities lawyer, so I'm not an expert on this. But basically, in order for something to be a security, you need certain criteria for that to happen. So you need a managerial and entrepreneurial effort that is designated to, basically develop something. Now, you could argue that Ethereum getting updates all the time could constitute that, but that's not enough. you need also to, for example, when you're buying Ethereum, you are placing your money into a common pool that you're expecting to derive value solely from the work of others. Is that the case? No. When you buy Ethereum, is that a company that is working for you? Did somebody come to you and say, hey, give me your Ethereum and I'll give you whatever? No. When you stake Ethereum is a way of validating the transactions, just like a miner does it. It just has less negative externalities. So for example, what happens in Bitcoin mining? Somebody goes and buys the mining hardware, then they spend a lot of electricity, and at the end of the exercise, they have won Bitcoin. And they need to sell part of that Bitcoin to pay for electricity and to pay for the mining hardware companies and to pay for all of this, right? Ethereum, no. Ethereum is basically you lock your coins for a few time period, you run a much less energy intensive validating hardware system, and that's it. Your reward is by having the software ongoing non-stop, you get Ethereum at the end. That's it, but it's the code. Here is the key. The code is giving you the Ethereum, not a company. Now, if this was like Ethereum Foundation giving you the coins, or if this was Vitalik sending you the coins for doing that work, now that could be considered a security. But that's not the case. It's the code itself generates more Ethereum. It's a bit like Bitcoin. Think about Bitcoin. Who's giving Bitcoin to the miners? Is Satoshi giving Bitcoin to the miners? Is there a Bitcoin company giving Bitcoin to the miners? Or is the rules of the code that give you more Bitcoin? Is the rules of the code. So in my view, it can never be a security. And then people say, oh yeah, but it's central. There's a lot of centralization on Ethereum. Well, it depends on what you're talking about. Are you talking about ownership? Yes, that is true. Ethereum is more centralized in terms of ownership, people who own it, than Bitcoin. But Bitcoin is more centralized in the sense that there's only about 4 mining companies. There are 4 or 5 mining pools. There is 3 or 4 companies in the middle of nowhere that basically develop the mining hardware. So basically, you have 3 or 4 companies for all the mining. You have 4 or 5 mining pools for all the mining. By the way, BlackRock owns quite a bit of all of this. But then the ownership is more spread out. So in the operational side, Bitcoin is more centralized than Ethereum, but on the ownership side, Ethereum is more centralized than Bitcoin. So what kind of centralization are you talking about? It depends on what you mean by that. We're talking about, and even on Bitcoin, like Bitcoin is decentralized. Look, there's something called Bitcoin Rich List. If you check it, you're going to see that about 2,600 wallets own 40+% of Bitcoin, which means 2,600 people can dump the price to zero if they want. Of course, they're not going to do it because nobody, destroys their own bags. But in theory, they can do it. So is that really that decentralized? It depends on how you look at it. Look, one of the best coins I've been performing is BNB. BNB is 99% owned by a few wallets. People that buy it seem to be happy with it, seem to do very well with it. So I don't think that would be an argument for being a security. I do expect the price of Ethereum to actually, be under attack, if you will. You're going to see a lot of FUD against Ethereum. Why? Because the spot ETF providers want to buy it cheaper. Just like when it was with Bitcoin. There's always news coming out right at the time that Fidelity and BlackRock and so on were accumulating. Same story. So that was question number 2. What was question number 3? Oh yeah, somebody was asking me if basically I thought that this time the cycle is going to be different because the spot ETFs were here, etc. Bitcoin is at $60,000 at the moment, 60,200, whatever. What have I been saying in this channel for months and months and months? You remember the big channels like Ivan on Tech, all these people talking about Bitcoin 90K in 2 weeks, Bitcoin 100K, Bitcoin 1 million coming. This time there's no Bitcoin sell-off after the halving. all of these kind of things. What have I been saying for months? The Bitcoin halving is a buy the rumor, sell the news event. I've been saying this all the time. I said expect a rise into the halving, and around the halving period, expect a sell-off. And if that sell-off matches the previous cycles, we're talking about 2013, 38%, 2016, 39%, 2020, 38%. I said if we do repeat that pattern, that will throw Bitcoin to around 45, 50K. 45K, by the way, is the 200-day moving average on Bitcoin. Give a few $100. So what a perfect place for we to retest before we move higher. Probably with a little wick. Probably we'll do just like this. Now, can we stop sooner? Maybe Bitcoin stops at 55K. Maybe Bitcoin stops at 53K. What did I say? 38% is the average sell-off, and it lasts a month and a half on average, which means, from 19 April up until early June, end of May, mid-June, somewhere around that time period, we should see Bitcoin somewhere between 45 to 52K. Why 52K? Because some people will try to front run and will probably try to stop the bleeding at 52. Maybe we stop at 55 because the ETFs come in. Maybe we don't. The point is, no way we're going to go to 90K straight on. And I give you this information for free. I don't charge you anything. I don't sell you mastermind courses. I don't add you to my Patreon. I don't ask you to buy my Discord. No, I give this for free. And to me, I was under the belief that we may, within May and early June, I don't know what kind of news are going to come out. I don't know what kind of pre-programmed FUD is going to come out. That's anybody's guess. But I do see something happening that will lead Bitcoin into the 45, 50K range. And the 45K is the 200-day moving average for Bitcoin. That would be a perfect spot. And also around the 49, 48K, that's when we broke out into the upside. And the retest of that breakout would be actually very profitable. What I said was, I'm looking at that possibility to accumulate one last time into certain coins that I like. That's what I said. If it doesn't happen, it's not a problem because I'm already positioned. But for people who didn't, bear in mind, or also people who've made a lot of money so far, that if you start to see your coins selling off quite aggressively, bear in mind that this happened in the past and there's nothing new at the moment. The only thing new is that we hit the all-time high for Bitcoin before the halving, which has never happened. But the sell-off after the halving, so far, we are on pace with the previous cycles. I don't see anything different. A lot of people became complacent after 7 months of Bitcoin green candles. And people forget that we sell off. You see, I don't charge anything because I don't need to. I don't need your $200 for a course. Just give this information for free. And that's it. I said, maybe I'm wrong. Maybe we're gonna have a buy the rumor, buy the news event, the first in history. I'm not very keen on those, but other people were predicting, were telling you 90K Bitcoin in 2 weeks. I don't think so. And I've been saying this for months and months and months and months, I think since last year. Understand that this is gonna happen. What I've been wrong, this is because I always tell is that I would expect Ethereum to be much stronger than it is. But I also said third cycle curse, be careful with that. And I'm gonna say something else. Solana meme coins already had their altcoin season. They've done very, very well. Now there's a probability that they will come up for the second pump, the real bull run. I'm not saying it's not possible, but bear in mind that Solana already went to the moon. If Ethereum gets its ETF, like in August, let's say in August, you're gonna see a huge pump on Ethereum, which will lift all the coins with it. And we've seen this in the past, where in certain chains, they do very well in the beginning, and then they kind of underperform the rest of the market. So Solana people, I hope that doesn't happen. You guys know me. I want all of us to do very well. The more eyes, the more talking, the more economic power comes into crypto. In my book, that's positive. So I'm not one of these tribal guys. Oh, that drop that crap and sell that whatever. No. But have that in mind. Solana coins had huge pumps. I saw some coins, going from 1 million to 100 million market cap in like 3 days. And I've seen a lot of them doing that. So bear in mind that sometimes when these alternative chains and ecosystems pump in advance of Ethereum, for example, then they end up not coming back, or much less coins or much fewer coins end up coming back for a very strong pump during the rest of the cycle. Just keep that in mind, guys. That's all I'm saying. Not advising you to go and sell all your coins or anything like that. I'm just reporting on things that I've witnessed before. That's it. And with that, guys, I think we covered a lot of information today. I'm not here saying that Bitcoin is going to collapse or not collapse. That's not my point. 60K has been a strong support level. But below that, there's very little support. And you need to understand this. I do think, my view, if you ask me today, what is more likely, 45, 50K on Bitcoin, I think that's likely. And that will be the last stop before the real massive bull market that will throw us somewhere into Bitcoin 240 to 270K. And with that, guys, thank you very much for your support. You already know, don't give you financial advice, just my take on the market. You can judge me at the end of, beginning of June, like give me to the 10th of June, okay? If none of this has happened, you can destroy me in the comment section, okay? Thank you very much for your support, guys, and I'll catch you in the next one.